Welcome to another Ronel Talks Money show. And today I'm going to talk about something that when I've discovered it the first time, I really thought this is very exciting because it's an investment opportunity, but it's much more than an investment opportunity because you also have the opportunity to really make an impact, and it's much bigger than only investing and for you to benefit, but also other people that can benefit as well, and that is impact farming. Now, just before we introduce the guest, I just want to tell you again that we are again going to do a giveaway of my book, Financially Fit and Wealthy. So please go and subscribe to the channel, share this video, comment, tell us what do you like about this talk, if you have any questions, and then you might be able to receive a Financially Fit and Wealthy book for free. Now, today we are going to talk about impact farming, and we have Sheldon Fredrickson, the CFO of Fed Group, with me. And he's going to tell us a little bit more about what it is all about and how you can also get involved if it's something that might suit you or that you can be excited about. Now, just to quickly tell you a little bit more about Fed Group, they were established in 1990, so they are celebrating their 50th birthday this year, and they have grown into one of South Africa's leading independent financial services groups, and they are also an authorized financial services provider. Now, Sheldon, thanks a lot for joining me today.
Thanks very much for having me, Ronel. I look forward to it.
That's awesome. Now, we really have a very different topic today. So I think you need to maybe start off by just explaining to us the concept of impact farming in layman's terms. What is it all about?
So impact farming was an innovative product that we developed. So we, as you mentioned before, we are a financial services group. However, this product is not a financial services product. It is working on a platform, bringing individuals that are wanting to own an asset with other companies or individuals that have an asset that they're wishing to sell. So the concept of this is that with your capital, you actually own an underlying revenue producing asset, such as a blueberry bush, a solar panel, or a beehive, that through the platform is looked after and maintained at its highest and best use to deliver your return. So your income return as well as your capital back, and the actual user of that product, so a blueberry bush being the farmer, would farm the product, get the produce, and get paid their share of the income that's produced from that asset.
So it is pretty much, I think if I remember my childhood days when my grandparents were living on a farm, it always looked so ideal to me to live on a farm, but I mean, I'm way too scared to live on a farm, and I don't have any gardening type of skills, so I assume I will also not be a good farmer. But I mean, now I have that opportunity to, you know, like own a asset that's basically part of, you know, like in a farming venture or project. So this is definitely something that I think would excite a lot of people. But tell us maybe just a little bit more about the different options that you have. You've mentioned now the blueberries, the honey, the solar. Tell us a bit about those options that you have available, as well as the pros and the cons of those.
So I think the pro of what impact farming enables you to do is you as an individual, if you wanted to start a blueberry farm, it would take a significant amount of capital from yourself. So speaking to what you're saying about your grandparents, you know, the idyllic thing of having a farm, it's a lot of risk in that farm. It takes a lot of money to create a farm and to run that farm. And that is all on your shoulders as being, you know, the farm owner and operator. What the platform, the pro of the platform enables you to do is to invest at whatever level you would want to invest, as well as also diversify your investment. So you don't have to have solar panels on just one property. You could buy a panel on 10 properties, and that diversification, and that's the pro of the platform, is that I'm interested in one of these products, but I also don't want to put all my money in a single product or a single farm, and you can spread it out and reduce that risk, or that concentration risk, as we would call it. But speaking to each of the options, so solar, renewable energy, we as Africans, but also the world, there is this big drive for sustainable renewable energy. And this fits in that framework. There's going to be, well, there has been, and there will continue to be a shift in the electricity supply in South Africa to have a more blended supply of electricity, not just reliant on coal power or nuclear power from Eskom, but other power producers. And what the solar opportunity allows you to do is, from as little as 5,000 Rand being a single panel, you can buy on a commercial rooftop. So the actual user of what your asset that you would own, the user of that being the person who acquires and the rights to the electricity that your solar panel is producing, it's a commercial off-taker. So that's where your credit risk is reduced. You know, the commercial owner would want to pay for that panel because they've got their tenants that need the electricity. And that's where the management of that is what Fed Group and the platform provide, delivering you your return. So for you to get involved in this rooftop, you would need upwards of 5 million Rand or more, depending on the size of the site, to actually install a commercial rooftop. Now that is a larger chunk of money that you're putting in one property, whereas through the platform, you are able to invest in multiple of them. So the pro of this investment is it's really predictable. So solar panels are performance warranted in terms of what they would produce based on the design and the due diligence process that we go through before we actually install your panel. There's a forecast of what those panels would produce, with the EPC or the solar panel installer giving a performance guarantee that this site, based on this design and our installation, we guarantee that this is what it would produce. And then that predictability of the seasonality of the weather patterns, your income is fairly predictable. You will get paid monthly in terms of the billing cycle, and that is how your return would be generated over the 20-year span of your investment. I guess the con of the investment, like with any investment, there is risk. However, based on the risk mitigation that we put in place, this is reduced, but your risk of changes in weather impacts your returns. You know, climate change, all of those things are changing weather patterns, but there hasn't been that significant a change in terms of the solar irradiation level. So that is a smaller impact. In terms of us managing tenants and the repayment of kind of your returns, there's that risk of credit loss that people aren't paying, and that's where you have your risk mitigations in terms of sureties and the legal process that we go through in terms of that collection, should that end up being the result. But I think most of us in our households know that, well, it's very hard for us to live with our electricity now. So if you're going to pay something, probably your electricity, you wouldn't want them to cut off your electricity. So that's the person that you pay. And we found that in this product, is that generally people want to pay the electricity. They need the electricity to survive in terms of their businesses. So we don't have very low bad debts, or we have no bad debts and very low arrears in this product. In terms of the Blueberry investment, the minimum capital that you would need to invest is 300 Rand for a blueberry bush, or the right to the produce of that blueberry bush. And that is our lowest entry point in terms of impact farming. Now, blueberries being a superfood, high in antioxidants, and a booming industry, particularly internationally, but also I'm sure people have seen more and more blueberries on the shelves inside South African stores. Basically participating in that growth market and the use of blueberries in it is really what this enables. And the benefits of this is the job creation, utilizing what previously could have been fallow land, like unused land. There's now a producing farm that is helping the farm owner, the farm workers in the community nearby, giving them employment and revenue that helps them support their economy. Now, the farming techniques that we use are also kind of conserve water in this farming with the weather protections, etc., to try and risk mitigate. So in all of our products, we try and risk mitigate as much as we can. With farming, you look after a plant grows and matures over a period of years, and that could be seen as a con of this investment, is that it does take time for it to reach its ultimate production capacity, but that is what farming is entailed in farming, and that's where your return and the profile of your payments. You start off small based on a smaller harvest initially, which grows into its full mature harvest, which would take place over the rest of its maturity period, being an 8-year period. But your return that you're looking at generating there compensates you for that lower return initially. In terms of the honey and owning a beehive, the entry point there is 4,000 Rand for a beehive. And I think bees are the essence of farming. They are required for pollination and actually creating the farms. And without bees, basically our food security is in trouble. So we wanted to support the bees, and we feel that investors also wanting to support sustainable bee farming, looking after the bees, as well as participating in research projects in terms of understanding why there's beehive colony collapse and what can be done. Is pesticides an issue, which I think it's been proved that it is. So it's also aligning that, well, our beehives are on pesticide-free farms, trying to support an ecosystem that is sustainable and providing us food security. And in the space, there's still job creation as more beehives are farmed here, and as South Africans, we have to import less honey from offshore. There's going to be job creation inside the honey market inside South Africa. In terms of the cons of this, you have a beehive and it is susceptible to weather change, the health of the beehive, and that's where the risk mitigation that we put in place is about understanding what's happening in those hives through IoT devices, through active management with our partners, but looking after those bees as if they were your children. You are wanting those bees to be healthy, looking after themselves with the support that you're giving them, and having a food source and a water source nearby, being a farm that supports them in their growth.
I absolutely love the whole social impact idea of this. I think this is so important, and like I said at the beginning as well, now it's much more than just kind of investing in something and receiving returns. You are now actually part of something much bigger, and I think that this is definitely something, if you think of South Africa and the economy and, like we said, job creation, food security, this is definitely, I think, where the future needs to go to, like in having more of these kind of ventures. Now, you've chosen blueberries and honey and solar, and I can obviously understand the solar, but in terms of the honey and the blueberries, why did you choose those? And are you planning on bringing more kind of products on board?
Yes, Ronel, we looked at many different products, and I think the alignment that we want to get is a fair return to the investor, as well as doing something big with your money, making a difference. And with that, we wanted to ensure that there was the risk mitigations in place, so a bankable product. So after looking at all the various types of products that we want to put on the platform over time, these were the most mature kind of products that we wanted to launch with. So the first one being solar that we launched with, and then we've added honey and honey and blueberries to the platform thereafter. And it's really around that ecosystem of the various participants that delivers a risk mitigated product that delivers the return, as well as doing a measurable impact in the economy. other products just aren't at that maturity stage that we bring them on right now, but we are actively, constantly working with partners, working on helping them in their solution to get it into what we would term, a platform-ready product that has a secure offtake for the produce that's produced, as well as a farming methodology and a farm that is producing what basically a forecast is. So when you are investing on the platform, it's gone through a strict due diligence, and that this product, through its risk mitigation, should deliver the return that is stated on our app, on the website, and it's also a measurable difference in making an impact in South Africa.
And I believe with similar like a unit trust, where you have a fund manager basically looking after your investment, and you do not really need to have that detailed knowledge of like what's going on in the markets. And I think this is very similar. You do not really need a lot of knowledge or experience or whatever about farming and agriculture, because there is somebody who is knowledgeable about this and has a lot of experience who look after this. Is that correct? You do not really need a lot of agricultural type of experience to get involved in this as an investor.
100% right. So playing on our experience as a financial services provider, that is how we've structured the platform, is bringing in the right experts to deliver on the solution. But where this is slightly different from unit trust is that tangibility, that I own an asset on this farm or on this solar site, and these are the people that are looking after it for me, but I can actually also be involved, understand it, go to our content hub and understand what goes into farming a blueberry bush, and kind of gain that technical knowledge through the process, but you don't have to know it. Often in a unit trust, you're putting your money in a fund, and it is often going into good projects, companies that are doing good and making a difference and delivering a return to you. But it's almost that indirect. You're not 100% sure what companies am I invested in all the time. A fact sheet lists the top 10 exposures. Whereas you know exactly what you're doing, and it's measured by our IoT devices, and you can see the impact that you're actually making. So it's, it makes it more tangible and real to you.
And then in terms of the, because we obviously know now your traditional investments where, your profits are your returns are pretty much derived from, unit prices and share prices and all of those kind of things. But now in this concept, how would your returns typically be calculated?
So there's a financial model that underpins that has been back tested to previous sites and is constantly back tested and reworked to obviously our sites that we have invested in and continue to invest in. And that financial model has various assumptions. So on the solar side, electricity price escalations. So historically, they have averaged in the double digits, as we've all experienced over a period, but it's that forward-looking forecast and looking at what we are going to get as that return. So your return is basically an internal rate of return, which is a tricky concept for if people aren't familiar with it, but it really is looking at the expected cash flows when they are expected compared to when you invest today, and working that back using that money that you earn in 20 years' time is worth less to you today, and calculating a return on your investment, which is quoted annually.
But I think to make it practical, would it be something kind of now the blueberry bush has grown and they have their blueberries, and now the farmer is selling it off to the company or a retailer or whoever, and then they are receiving a profit, and then it's basically that kind of profit that you would use to distribute.
Yes, Ronel. So the model is that it is a direct ownership. So basically what the platform enables is a partnership between you and the various other providers and experts. So if we take it as, there's a blueberry bush, you get blueberries, which is the actual revenue the bush is the revenue generating asset, but where your revenue comes from is selling the berries. And that money comes in and then is divided amongst the various participants, with yourself being the investor, being one of those participants. So the farmer gets their share for managing the farm, looking after the farm, with all the interests aligned. If a farmer looks after his farm better than the next farmer, he will earn more in terms of that profit share, but you will also earn more as the investor, because the farm has just produced more than we had initially predicted. And that's where it's about partnering together with and cutting out the layers that sometimes get created inside these things. So you have your single farmer who's selling to, you know, a food processing aggregator, who then sells to a wholesaler, who then sells to a retailer, and all of those individuals add on their gross profit margin. And that's where we've tried to collapse that in our platform to take the produce as quickly as possible to the end consumer, being you in a retailer, and using that additional margin to obviously share amongst the participants that are actually generating the return for everyone.
And then you've mentioned that you are owning the asset, which is, for example, the blueberry bush, and you mentioned that it's a 300 Rand minimum investment. So would it then basically mean that if you invest 3,000 Rand, you would basically own 10 blueberry bushes on this big farm? Is that basically how it works?
Exactly how it works, yes.
Okay. And then how soon after you have like put in your money on your investment can you almost expect to receive a return?
So each product is slightly different. So on our solar plants, depending on the stage of the plant's construction, will depend on the timelines, but generally a construction can take up to 2 months, and a completion of that construction is its registration with NERSA. And with COVID, there has been some impacts in terms of the registration process, in terms of getting that through, but that is rectifying itself, and we've seen a big change, particularly in the press, around announcements of IPP plans, and they're needing to incorporate further power producers into the electricity ecosystem in South Africa. So there, in terms of your investment, depending on that, you would be looking at a 2-month delay, and then you would start receiving your monthly income. Now, that 2 months you could invest the day before, it's actually what we call commissioned, and then you'll earn the next month. So it just depends on the timing of when you come, and that is on our app, you'll see at what stage of the construction that we're in for the site that's listed. On the beehive, that depends on when a hive can be swarmed. Now, there's best times to swarm hives. So if you have a hive if you buy a hive that isn't swarmed, that swarming process is dependent on a lot of variables, but generally it takes about a month to swarm a hive, and then that hive can be deployed to a farm and start producing the honey. And then you would start getting your twice-a-year incomes. And so depending on when you invested and when it swarmed and when your incomes, you would get at that next harvest period. But then you'd be getting a twice-a-year return. On the blueberries, because of the construction period of those, we have, as Speg Group, pre-funded the sites. So we have live plants that are already planted that have gone through their first year of maturity, and now the plants that we're selling are coming up into, well, we're nearing in their first harvest, and the harvest takes place over a 3-month period from October through to the end of December, and those berries are sold in the market, and that's where you'd be expecting your cash flows December or January. So if someone had to go and invest in a blueberry bush, if they had invested in September, then you'd be waiting a month. However, if you invest in one in January, you would be waiting until, you know, November, December, January to receive your first income, and that's an annual cycle.
Okay, and then if somebody is now convinced, okay, I want to explore this, I want to try it out, how do you get started?
So from my perspective, it's about understanding what you're investing. So being a financial services provider, we do want people to understand how they're making their money work for them. So I would download the app and read through each of the products just to understand kind of how it works. And as you said, you don't have to be a technical expert, and we've tried to make it as clear as possible in terms of where your money is being put to work for you and why this is a great investment. Then it is about deciding which assets you want to, like how much money you would want to invest in this and which assets you would want. Like I myself have a variety of them, believe in diversification. So, one of each, and buying, we have starting out bundles when you register that give you an array that you can buy. And yeah, as I said, you can start from as little as 300 Rand just to get to understand the product. And then Beehive is 4,000 Rand and solar panel is 5,000 Rand. But start with the portfolio just to get a feel for what the product is. And then, you can invest more and more depending on your financial means and the exposure that you want to take.
And I guess it is a quite liquid, that it's easy to sell off. If I say, for instance, start off with one blueberry bush and one beehive and one solar panel, and then I said, okay, I'm happy, but I want to change now. I rather want to only go into solar or whatever. Is it quite easy to change at any point?
So we do have a marketplace, and that's where the marketplace is subject to supply and demand. So we have new assets, and then there's also availability of second-hand assets, and that's where individuals can sell and liquidate their position. So I guess the answer is it's as liquid as that marketplace is, and depending on the demand for a second-hand already income-producing kind of assets. So a solar panel, you can either buy a new one that is going to be commissioned on a new site, or you can invest in one that has been installed for a year, let's just say, that has been producing income for a year, and that person is just wanting to liquidate, and you can actually buy that, and then it's instantly income producing. So yeah, we have liquidity in that space, but it is dependent on kind of market demand.
Okay, now you have mentioned some of the kind of characteristics of this type of investment, but maybe you can also just touch on how is it really different from your traditional investments. I mean, you are in the financial services space, from your normal, like your unit trusts, those kind of things. How is this investment different?
So at the moment, when you invest in a unit trust, you're investing in a myriad of underlying assets, but often those assets that you're investing in are financial instruments that are issued by companies. So inside a unit trust, you may have an exposure to an agricultural investment, but actually you are earning a piece of paper that is giving you a return from the farmer for investing in the farm, and your allocation from that unit trust might only be 0.1%. So it's a small allocation into that. So often you may be invested in the same type of underlying assets. Renewable energy company issues a bond, and your unit trust that you invested in buys a piece of that bond. You are actually exposed to renewable energy, but you indirectly exposed. So there's someone taking a gross profit, paying salaries of the company, etc., and you are getting paid on the bond that they've issued. So where this differs is that you are invested directly in the assets. So you are part of that value sharing ecosystem, and there aren't really middle people in this. It's about partnering together to deliver the return that we want. So now you have that direct exposure and direct measurement of my asset actually did this impact as well as delivered this return to me, instead of in this pooling vehicle of the unit trust where you also don't have control in what you invest in. There's an asset manager who decides that, well, at this point in the unit trust, I actually believe there's an opportunity in to invest in coal, and you as an individual might not want to be exposed to coal, but you have limited ability to control what that investment is, except for I'm not going to be in this unit trust, I'm going to move to a different unit trust. So then it's a disinvest completely and then invest into something else. Whereas, yeah, you are in control. You are the asset owner. You're making the choice of what assets am I going to hold and building your own portfolio through the platform.
But I think on that note, you are also now saying that you are owning that asset, but I mean, that obviously also, that's attached to certain risks. I think and I mean, after 2020, we know that absolutely anything can happen, and strange things can actually happen. So, and if you think of what happened, like recently with the fires, you know, like in destroying so much of farmland. So those are typically kind of risks that you need to look out for. But what are kind of like an overall the risks, and how can you mitigate it? Because I assume, like you've also mentioned, you can diversify by having like in basically all three products, but what's typically the things that you would suggest or advise on in terms of the risks, and how can you mitigate that?
So I think we have all learned that it's hard to mitigate all risk. As you said, strange things can happen and all these things happen. And I'm sure at the moment, there's many businesses that felt, but I risk mitigated. I took out business interruption cover, but now we're having to fight for my payout of cover that I thought I was covered for this risk where I actually can't operate. And I think that's where you going through the due diligence process from our side is around identifying the risks and putting in as best risk mitigations as you can. So utilizing insurance, utilizing, you know, hail-proof netting, you know, identifying what risk could happen to protect your investment and making sure those are maintained, which is why the partnerships and the due diligence with the partners in this value ecosystem is crucial. Is how actively are we managing your asset that is on this farm? Are we making sure that fire breaks are in order, maintained? We've got, you know, we've tested our risk mitigations. We've made sure that the insurance cover is appropriate for the risks that we've identified, and keeping track and that feedback loop of saying, well, what new risks are coming out? And that's part of the process of choosing what assets that we put on the platform, is also looking at what market do they operate in, what risks in terms of the sellability of the assets, what is the price stability, are we exporting most of the blueberries, and then you've got foreign exchange risk. How stable is the rand? I think we'll feel the rand depreciating, which in this type of investment, it actually helps you in exporting. You're going to get more rand for the blueberry sold. And, you know, what is the electricity mix? What is the concerns from a regulatory perspective in terms of maintaining a renewable energy plant and registering it? And all of those have been answered over the period, and it's about kind of Fed Group performing that due diligence function and the constant compliance to make sure that we are up to speed with new market developments and making sure that your asset continues to produce what it's supposed to produce. From an investment risk perspective, that's where diversification is key in terms of limiting total loss. But often what happens with diversification is also you lose access to opportunities if you're willing to take that little bit more risk. And I think that's where understanding your risk appetite as an individual and how much of your capital or discretionary investment that you're willing to put at risk, and understanding what you're investing in and what is the downside risk. So, you know, a complete and total loss of an investment, you kind of, is that devastating for you? Well, then maybe you're investing too much in one particular asset, and that's where diversification comes in. But understanding that, well, I'm investing in a solar panel, and maybe a building goes vacant for 4 months because of COVID. Now the tenants aren't there and they're not paying, but they will return, and the solar panel will continue to produce, and I'll start getting my return then. And you know, I haven't lost my money. I haven't lost the asset that I own. It will still be a revenue generating asset. It just may take time to come back fully online.
Okay, and then in terms of the impact, or what can have an impact on the returns, I think we have mentioned now things like weather conditions, natural disasters, those kind of things that you would not really consider in your more traditional type of investments. But what other type of things would impact on your returns? You know, things like politics, the economy, those kind of things, interest rates. Is there kind of any link to it?
So I think every investment is often impacted by the same things. And I think when we invest in a unit trust, often it's that indirect relationship. So companies are impacted by interest rates, which if you invested in a company that is severely impacted by interest rates and political turmoil, your shares will decrease in value, which will impact your investment. But it's that indirect nature. I think the difference here is that through your kind of going through our app and understanding the investment, you truly understand what you're investing in and also what the risks you face. So I mentioned before, we export blueberries. So we have foreign exchange risk. If the rand appreciates in value at the time when we are selling the produce in overseas market, that would impact your rand return on your investment. In terms of, you know, the rainfall, we have mitigations to control that with reserve water sufficient to last a farm for over a year. However, you know, decrease in rain has an impact in agriculture. It also has an impact in the beehives in terms of availability of water sources. And that's where it's building that ecosystem that we try to risk mitigate these things. But we're impacted by, not so much by interest rates, but indirectly interest rates have an impact on inflation, which then impacts pricing, what prices you would get in the shelf, supply and demand pricing. So as more blueberries are produced and try to be sold in certain markets, your supply goes up. Generally, it reduces the price that you would sell it at. And that's where with our partners looking at new economies to introduce blueberries into. So we are the producer and they still that scarce resource. There's still such an undersupply of blueberries. So this is something that we're looking at in terms of the future. But yeah, we are looking after people that are investing in a blueberry bush for an 8-year period. So we have to be future looking and making sure that we're on top of these things. Then political aspects impact all companies, you know, change in legislation, change in kind of how you have to comply to register a solar site. And at the moment, we're seeing more positive change in that political agenda that will have a positive benefit to your kind of solar venture, if you're going into solar venture, because South Africa is in desperate need of energy, and there are sustainability carbon credits that have been agreed to internationally that are coming to the fore now. So Eskom itself has to manage its carbon footprint, and with that, there's going to be a drive to renewable energy. So basically, 5 years ago, we knew this would be the end result of where we'd be coming to. It's just how we get there and how it's legislated is the challenge, but we're seeing great progress in that now.
Okay, that sounds awesome. And then what about fees? What are typically the fees involved? And also maybe if you can just touch on the tax implications as well.
So as an investor on the impact farming platform, you don't pay any fees. So your return is your return, and there's no fees that you pay to participate on the platform. The next question people ask is, then why is Fair Group doing this if it earns no fees? And that's where, in terms of the value partnership that we put, Fair Group is that partner. We provide the platform and that due diligence and governance layer that is looking after the various other providers, being, you know, the farmer, the off-taker, the operations and maintenance team. We look after that, and that's where we are a sharer in that, the revenue, and investing alongside you, and that's where we earn our fees. From a tax perspective, each person's tax affairs is different, and that's where not everyone's tax would be exactly the same, but you have bought an asset that depreciates over its useful life, and there's various tax provisions that enable you some accelerated depreciation. So it enables you to claim back more of that initial capital outlay because now you own an asset. So, a solar panel, you can use Section 12B, which is a accelerated depreciation provision or capital allowance provision in Income Tax Act for renewable energy. And why this exists is SARS was encouraging the industry to invest in renewable energy. And they did this by allowing them, or businesses and individuals, to claim an upfront deduction for the capital cost of actually deploying the renewable energy. So that is a deduction that you can claim. And then your income, you would declare your income as income on your asset. So basically it's your turnover or revenue from the venture that you're running. So if you buy a solar panel, you are now running a solar business and you have one panel, let's just say, earning this income, and you declare that as income, and you can claim the deductions that exist in terms of depreciation, as well as the costs of running your business, because in the end, this is your venture. You're now running a side hustle, and that side hustle takes some of your time. It takes some of equipment to use. You're looking after your investment, and those are some of the deductions that you can claim inside this business.
And any capital gains tax?
On the sale of your assets, so if you are exiting through the second-hand marketplace, then that's where capital gains, more in terms of this being a revenue generating or an operating type venture, you would have to, trying to give a simpler way, but pay back any depreciation that you had previously claimed as a deduction. You would pay that back in terms of a recoupment that SARS would want you. They wouldn't want you to be able to take a deduction and now receive greater income. They would want their share in that in terms of equalizing both parties.
Okay, so then last question. So for people who want to get involved, who want to invest, you've said now that on your website, first of all, they can go and just go through all the information. But so would that be kind of the first step, go to your website and download the app and get the information, and then you can invest and get going?
That's exactly right. So there is a link on our website, or you can go onto the App Store, so the Apple App Store or the Play Store for Android, and you can just download the Fig Group app, and then the information is contained there. Once you've registered, you have access to the information, and then you can add to your cart and buy at any time. We have a content hub that has additional information, interviews with actual underlying farmers, various articles, but just, it's important for me that you understand what you're investing in and what is, your viewpoint on this investment. The greatest return you can get from this investment is to hold it to maturity. So, in terms of that, it's not looking at trying to come in for 2 years and selling out, because the best return you'll get is to hold it to maturity. But we understand that people's circumstances change, and that's why there is a second-hand marketplace. But the best return you can get is to hold it to the end, and it's understanding that if I'm in a solar panel, the best return is, this is me investing 5,000 Rand per panel for 20 years, and then I'll get the best return from that investment that is predictable. It's producing utility that people would want to pay for at a price that they want to pay for it, and also doing good in the environment from both parties. So it's something that I believe in, and I'm going to be invested for 20 years and get my monthly return from my panel.
Okay, Sheldon, I want to say thanks a lot for joining me today. I think it was really so useful to get this kind of information and just to get a better understanding of how all of this works. I think it's not yet a concept that's maybe like familiar to a lot of investors out there. So I hope this talk has given you a bit more insight into what it is all about. And I also want to congratulate Fed Group for this going into this venture. I think this is definitely something that has a bigger impact and something that can definitely make a bigger change and impact in South Africa. So for the viewers, I want to thank you for watching this video. I hope it added value to you. And yeah, please go and subscribe to the channel. Give us your comments. What do you think about impact farming? Also, if you have any questions, let us know, then we can help you with that. And remember, there will be a giveaway of my book as well. So once again, Sheldon, thanks a lot for joining me today. And then it is up until the next Ronel Talks Money Show. Thank you and goodbye.